In 1772, the British Empire was the financial center of the world. Trading with numerous colonies contributed to the accumulation of wealth, goods, and financial loans. The government invested huge amounts of money in the construction of highways, buildings, canals, and other facilities, forcing a shortage of resources. At the same time, the colonies had an insatiable demand for capital, which contributed to the expansion of lending and banking. And then it led to speculation and dubious financial innovations. Now it's called venture capitalism, and one could also speak of economic anarchism. Rapid development continued until June 1772. Until Alexander Fordyce, partner of the London banking house Neil James Fordyce and Down, lost £300,000 on shares of the East-West India Company. Shares dramatically collapsed in price. Dutch bank Clifford & Co. tried to raise the price, but in the end it went bankrupt. Now, to avoid paying off his debts, Alexander Fordyce escaped to France, and this information caused panic and the world's first international financial crisis. The scandal broke out in London, but quickly spread to Scotland and the Dutch Republic. Depositors in Europe and the UK started to panic, demanding that the money be given back to them. And within 2 weeks, 8 banks in London went bankrupt. And then about 20 banks across Europe. The liquidity crisis devastated private banks from Amsterdam to Hamburg, from Genoa, Stockholm to Paris. The press was full of creepy stories about investors who committed suicide because of bankruptcy. The credit boom collapsed, triggering crisis in the East India Trading Company, the West India in general, and in the North American colonies in particular. After the crisis began, British merchants began to demand repayments of debts from the colonies. A whopping £2,958,390, no less, due to the economic boom that preceded the crisis. American planters were not ready to pay debts in such volumes. When the credit system collapsed and the bills were declared void, almost all the gold was sent to Britain. Planters from the colonies could no longer continue to produce and sell their goods. Thus, the British financial crisis of 1772 led to riots in 13 colonies, which later turned into the American Revolution and the struggle for independence. The Bank of England failed to contain the panic, but found tools to recover financially from the collapse. Regulation of the bill market and issuing of short-term loans to banks that did not have enough cash played a decisive role. Britain was able to return to pre-crisis growth rates in 5 years.